What's going on, Fractal Knights? Is Matt back with another video. Today we're going over the daily bias for January 24th. Let's get started. So, as you know, price we traded up into this fair value gap above last month's high, and now we're trading lower. Let me draw this gap for today, since it's Friday, and I created a video yesterday. You can go over for all the levels, but today we're just making this quick. So we opened, traded up, created a high, and now we're trading lower. Yesterday, I thought we would have some bullish reaction off of this mitigation block, the high, low, higher high, creating a mitigation block with this old high. But now that I see we blasted through it, I'm going straight down to the old low to map out a range. So now I'm going to just grab this old low, right? And now I have a range from this high to this low. If I grab this tool right here, which is basically a gradient tool, and grab it from this level down to the low, I have some gradients now that I can mark out. We have the quarter, the half, and 3/4, right? Let me delete this. The reason why I'm drawing these out is because if this is a range from low to high, and we draw out the gradients, we can get our precise premium and discount levels. So with this being the 50%, anything below it would be a discount, anything above it would be a premium. Let's go straight into the daily for today's daily bias. So as you can see, when we ran that old low yesterday on Wednesday, I was mentioning that we can have a Wednesday reversal to trade back up into this fair value gap. We draw out that fair value gap. Right. But one thing I forgot to mention with the PD arrays is that there's something called breakaway gaps in the market, meaning that this fair value gap did not have to fill. Right? It would have been nice if it filled on Thursday, right? Taking out Tuesday's high into this order block and then traded lower for Friday. Especially since we had the gradients and we have this quarter level. So anything above this quarter level would be a deep premium, right? So I was looking for it to trade up into the quarter level fair value gap and trade lower. As you can see, we traded up, but we did not get above that quarter level into the fair value gap. We just traded right back down, and now today's Friday, we traded into the discount, right? So let me just get more context. Below this line is discount. Make this blue. And then above this is premium. Let's make this red. Okay. So this is how I'm looking at the market. We have the old low, sell stops. We have the high that got created inside of that fair value gap. So now it's the 24th of January, meaning that we have 1, 2, 3, 4, 5, 6, 7 days left of the month, basically 1 week. It seems to me that January has already put in the high around 13th, especially with us trading up into that fair value gap. So let me just map out the beginning of the month, right? So we open, we trade higher, we create a high of the month, and now we're trading bearishly, respecting all up close candles, which are bearish order blocks. Close candle got respected. Here we thought that this would be a not a mitigation block, but a propulsion candle, meaning we used a first order block, and then if we traded back up into this, we'll see more of a quicker expansion, more of a propulsion, right? But what I've noticed, if I zoom straight in, remember we're still above this 50% of the gradient, so anything above here is technically a premium. So when I noticed this wick here, this large wick, yesterday I did not think we could trade up into the wick and trade lower. I was really focused on the fair value. But as you can see, when I get my gradients again of this wick, Thursday we opened and we traded up into that 50% of the wick. All right, I'll draw that out, and you'll see that on a smaller time frame. Instead of trading up into this fair value gap, we traded up into the wick, and then we traded lower. So this gap here will potentially be a breakaway gap, meaning that price is really bearish and they don't have to fill in any fair value to go lower. So as you can see below this 50, we have this gap here that I mentioned on the daily. All right, and we're trading there now. But as I told you, if this is the high of the month, this bullish fair value gap is not going to stop price from going lower, right? We still have our range from low to high. So if I grab Fibonacci and get the full range of the actual price, yes, we're below the 50. We didn't trade into any real deep discount. 62 and the 79 is here. So we still have bearishness on the US dollar. Let's go to a hourly chart. And we can see now our price has been coming from. So notice we created that high on the 13th and we've been trading low ever since. Notice how old highs are being taken, right? And then starting to continue lower. Again, old highs being taken. This is a swing high. We took it and then we gapped down. Again, this fair value gap, well, now is considered a breakaway gap, right? So we're not going to be looking for price to trade up into there. But again, price trades above an old high, right? And then trades lower. And then same thing for yesterday, Thursday. Let's zoom into Thursday. I was looking at this fair value gap that got formed, which technically it did what I said it would do. It would trade down into the fair value gap. It didn't take out this low. So from low to high, fair value gap. And then we rallied. But instead of rallying up into this fair value gap, now considered a breakaway gap, we rallied up into that 50% of the wick, which if I had that marked out, I would have noticed that there was a volume imbalance here, right? Boom. A nice volume imbalance, which price fills at 11 a.m., which is still technically in a kill zone, the London close. So that would have been the high of the day. Perfect entry for anyone trying to go short yesterday. We were trying to go short up here, as we mentioned, but there was a breakaway gap, which lined up with the daily wick, 50% consequent encroachment, right? So yes, we didn't get the full expansion on Thursday. We continued lower. And also, look what it's coupled with. Some highs right here. We take out the highs, and then we go lower. Same thing here for Asia session today. We take out a swing high, right, into this gap here. So when we take out the highs into the gaps, Those are like the clean setups, the cleanest ones that you can get. So for bearish, what I want you guys to study is old highs being taken during kill zones. So London kill zone takes a high and we go down. Asia kill zone trades above an old high and goes down, right? So with that being said, if we're continuing bearish, we have this old high here. So I can draw this out. And if price trades above this, right, inside of a kill zone, that could be a potential shorting opportunity. We did create a low here on that fair value gap, consequent encroachment, which is this line here, the 50%. But I'm not using that as any bullish, long-term bullish scenario. I'm still looking for this low to high and trading down into a deeper discount. But with the algorithm, when we have this range like this, we usually either hit the deepest discount, which is going to be below that 3/4 gradient, or if we're just fully bearish on the month, we're going to clear out the sell stops below this old low. Okay, so that was a quick little dollar index review for January 24th. And if you're asking me for the buys for today, Friday, it could be an indecisive day, but I'm still looking for bearish pricing. So today my daily bias is still bearish, looking for either old highs to get ran or bearish fair value gaps to get filled or any type of bearish PD array. But as you can see with price usually starts to move lower in a bearish model after buy stops are taken. So keep that in mind, guys. Continue to study, and these videos will be dropping daily, weekly. Thank you for your time.